Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USDCHF because at the moment we do have quite interesting price action and structure. Starting here from the monthly time frame, in fact, what we can see is that the market is currently testing previous monthly resistance, which is now turned here support and demand, since the market has broken it to the upside and is currently approaching it from above. We can also notice how we just had a strong impulse and correction, and in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how at the moment we have just reached the level which is in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse, which is a very strong level of monthly demand and support, which we did in fact expect the market to reach, and from here we could expect a potential rejection to the upside away from the area. Dropping down on the weekly, what we can see now, also here on the weekly, we can see how the market has been very precise in reaching this previous resistance turn support, from which there is the possibility for a potential rejection higher. Dropping down on the daily, we can see an even more interesting thing, which is the fact that in creating this move to the downside, the market also printed this overextended M pattern. And in general, after the creation of an overextended M pattern, you would like to see the market provide a rejection to the upside, at least to the 0.32 of the Fibonacci taken on the daily impulse. But overall, also for a completion all the way up at the neckline. So here on the daily, we could expect a potential rejection to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the CHF, we can see how with the last report, we went from having a minus 6.8k net positions all the way down once again to having minus 13k net positions. So we're starting once again to get more in the negative territory, meaning that more shorts are getting opened and longs getting closed. So overall, what this means is a long-term weak CHF, which is exactly what we need for this potential rejection to the upside on USDCHF. So how we could be approaching this potential longing opportunity? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the market to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.